Final account of partnership firm. Illustration number 1. Now already we have teach 11 final account of sole proprietorship firm. Now in this year the final account of partnership firm. Now Ram's illustration number 1. Ram's Yam and are partner or partnership firm sharing the profit and loss in the proportion of 6:4 from the following trial balance dated on 31st 3 2017 and adjustment prepare the annual account of the firm. The trial balance of partnership firm of Ram and Shyam is given. There is a trial balance of Ram, the debit balance amount, credit balance and amount. There is a two hidden adjustment on leasehold building, and the second adjustment 8% Gita's loan on 1/10/2016. Now adjustments, one by one adjustments. The first adjustments, the closing stock value 45,000 in market value of 10% more. Second adjustment, interest on capital. Please tick mark all the adjustments. 5% interest on partner's capital is chargeable, and drawings 10% interest is recoverable. Provide 10% depreciation on machinery and 5% on furnitures. Say a tick mark on machinery and furnitures. Provide 10% 5% bad debt reserve on debtors. Tick mark on debtors. Outstanding expense like salary, tick mark on salary, sundry expense, and rent. The adjustment closing stock 5% interest on capital, 10% interest on depreciation on machinery, and 5% on furniture, 5% bad debt reserve, outstanding expense, salary, sundry expense, and rent. Now, prepare the tables. The first tables, trading accounts of partnership firm Ram and Shyam for the year ending on 31st 3 2017. Debit credit particulars amount, the same format of profit and loss accounts. Profit and loss account of partnership firm of Ram Shyam for the year ending on 31st 3 2017. Debit credit particular amounts. Now another accounts is profit and loss appropriation accounts of partnership firm for the year ending on 31st 3 2017. Particular amount, debit credit. Now another partners capital accounts. Partners capital account of Ram and Shyam, date particulars Ram Shyam, date particulars Ram and Shyam. And last, balance sheet of partnership firm of Ram Shyam as on 31st 3 2017. Liabilities amount, assets amounts. Now from the trial balance we sort out all the debit balance and credit balance in trading accounts, profit and loss account, profit and loss appropriation, partners capital, and balance sheets. Now one by one, debit side. First drawings, partners capital account debit side, write down 31st 3 2017 to drawings account Ram 18,000 and Shyam 16,000. Drawings partners capital account debit side 31st 3 to 17 to drawings account 18,000 and 16,000. Now next, debtors is our assets, current assets. Partners balance sheet asset side, write down debtors inner column. There is an adjustment related to bad debt reserve, therefore inner column debtors 45,000. Second, next stock on 1/4/2016. Here is balance sheet date is the trial balance date is 31st 3 2017. Therefore stock on 1/4/2016. There is an opening stock trading account debit side, write down opening stock trading account debit side 25,000. Opening stock date is given 1/4, therefore is opening stock trading account debit side 25,000. Now sales return sales return, trading account credit side, buy sales. Sales amount is not given because of the credit balance, but sales return rupees 1000. Buy sales less sales return rupees 1000. Now next, cash balance. Cash balance is our assets. Write down cash balance. Asset side outer column 10,000. Cash balance asset side outer column 10,000. Now next, purchase. Purchase is 60,000. Trading accounts debit side inner column 60,000. Purchase trading account debit side inner column 60,000. Discount allowed. Discount allowed profit and loss account debit side to discount allowed 500. Discount allowed 500. Now next, bad debts. Write down format of bad debts. Bad debt T. T means trial balance. Bad debts A. A means adjustments plus bad debt reserve A means adjustments after one line, that is a bad debt reserve T means trial balance. Now bad debt T is given 400. So write down bad debt T. T means bad debt given in trial balance, that is a 400. Therefore bad debt T 400. Now next, machines. Machine inner column 18,250. Now depreciation on machinery. Depreciation on machinery, and there is another adjustments in on depreciation on machinery. Therefore, now they say that provide 10% depreciation on machinery. Okay. Now there is a new depreciation is calculated on machinery. Therefore, depreciation on machinery, that is old depreciation added to machinery. Old depreciation 1750. The total amount 20,000. Now, when we calculated depreciation in adjustment, then we calculated depreciation on 20,000. The total amount is 20,000. Now next, furniture. Furniture asset side inner column 8,000. Furniture asset side inner column 8,000. Now sundry expense. Sundry expense profit and loss account debit side 1,500. Inner column 1,500. There is an adjustment outstanding sundry expense. Therefore inner column 1,500. Now next, leasehold building and goodwill. Both their assets. So write down leasehold building asset side. Leasehold building asset side inner column 7,000 and goodwill outer column 40,000. Outer column 40,000. Now next, trading expense. Trading expense profit and loss account debit side 1,250. 1,250. Now next, rent and tax. There is an adjustment outstanding rent and tax. Therefore inner column 5,000. Now carriage inward. Carriage inward is a purchase related expense. Therefore trading account debit side, write down to carriage inward 400. Carriage inward is a trading expense, purchase related expense. Therefore debit side of trading accounts 400. Now next, bank interest. Bank interest profit and loss account debit side, write down 500 outer column. Bank interest profit and loss account debit side 500. Insurance premium 800 outer column. Insurance premium. Next is insurance premium 800 outer column. Next is salary. To salary 15,000 inner column. There is an outstanding salary. Therefore inner column 15,000. Now next, wages. Wages is purchase related expense. Therefore trading account debit side to wages outer column 14,000. Now next, prepaid insurance. Prepaid insurance is a prepaid, paid in advance. Therefore, is a receivable amount or assets. Write down asset side. Prepaid insurance 200. Prepaid insurance is a receivable paid in advance. Therefore, 200. Prepaid insurance 200. Now next, capitals. Capital of Ram and capital of Sam. Capital of Ram is 80,000 and capital of Sham is 70,000. So capital partners capital account credit side, write down date is a opening capital, therefore 1/4/2016 by balance brought forward 80,000 and 70,000. Next is creditors. Creditors is liability, therefore liability side outer column 35,000. Creditors is a liability side 35,000. Next, purchase return. Purchase return, purchase minus purchase return 1,500. Outer column 58,500. Next, bank overdraft. Bank overdraft is a liability side bank overdraft 8,000. Bank overdraft 8,000. Next, sales. Trading account credit side buy sales 78,150 minus 1,000 sales return, outer column 77,150. Now next, bad debt reserve. Bad debt in format, bad debt format already written earlier. Now bad debts T is 400, but bad debt reserve T write down 700. Bad debt reserve T 700. Outstanding wages. Outstanding wages is liability. 8% Geeta's loan is also liability, and bills payable is also liability. Write down outstanding wages, liability side, outer column 1,000. 8% Geeta's loan, there is a hidden adjustments, therefore inner column 15,000, and bills payable is a current liability, write down 200. Now देखो सारे एडजस्टमेंट्स ट्रायल बैलेंस सॉर्ट आउट हो चुका है. नाउ वन बाय वन एडजस्टमेंट्स, वन बाय वन एडजस्टमेंट. द फर्स्ट adjustments, the closing stock 45,000, its market value 10% more. For example, 45,000 plus 10% more is but 49,500. 45,000 and 49,500, whichever is less, 45,000. Market value is 49,500 and cost price is 45,000, whichever is less, 45,000. Therefore, we recorded closing stock 45,000. There are two effects. The first effects, trading account credit side, closing stock 45,000. Closing stock trading account credit side. Every adjustment have minimum two effect, one at debit, another is credit. The first effect, trading account credit side 45,000. The second effect, balance sheet asset side as a current assets 45,000. Second effect of closing stock asset side as a current assets 45,000. Now next, 5% interest on capital and 10% interest on drawings. Now first we calculate the interest on capitals. Date is 31st. Now interest on capital, there is a capital is 80,000. So 80,000 into 5%, there is a 4,000 of RAM, and Sham 70,000 into 5%, there is a 3,500. Now date 31st/3/2017, buy interest on capital 4,000 and 3,500. Now interest on drawings, 10% interest on drawings 31st/3/2017 to drawings, but write down 31st/3/2017, drawings is 18,000 and 16,000. The RAM drawings 18,000 into 10% 1,800, and Sham drawings is 16,000 into 10%, that is a 1,600. Write down interest on drawings 1,800 and 1,600. Now Interest on capitals, the second effect P&L appropriations debit side, and interest on drawings, the second effect P&L appropriation credit side. Now first we interest on capitals. Write down interest on capitals, P&L appropriation debit side. Write down interest on capitals. Ram 4,000, Shyam 3,500, outer column 7,500. Now interest on drawings. Interest on drawings, Ram 1,800 and Shyam 1,600. The total is 3,400. Outer column. Now interest on capital is an expense for firm and income for partners. Interest on drawings is income for firm and expense of partners. Therefore, it's credit side. This is debit side in P&L appropriations. Now, 10% depreciation on machinery. ना देखो यहाँ पे हमने देखा था कि मशीनरी 18,250 प्लस ओल्ड डेप्रिसिएशन. जब भी अगर आपको एडजस्टमेंट में भी बोला है कि डेप्रिसिएशन कैलकुलेट करना है एंड डेप्रिसिएशन ऑलरेडी गिवन इन ट्रायल बैलेंस, देन ओल्ड डेप्रिसिएशन एडेड टू मशीनरी and 18,250 plus 1,750. The total value of machinery before depreciation is 20,000. Now we calculate the new depreciation 10%, 2,000, outer column 18,000, and now furniture 5%, that is a 400, outer column 7,600. Now depreciations on machinery is an expense, therefore profit and loss account debit side, and depreciation on furniture is also an expense, therefore debited to profit and loss account debit side. Write down to depreciation on machinery 2,000 and depreciation on furniture 400. Clear? Profit and loss account debit side. Depreciation on machinery 2,000, depreciation on furniture 400. Now next adjustments, provide 5% bad debt reserve on debtors. Now the debtors is 45,000. Now we calculate the 5% bad debt reserve. Bad debt reserve 5% on debtors 45,000. Then 2250, 2,250. Outer column 42,750. And this is the bad debt reserve A. Bad debt reserve A. Write down here bad debt reserve A 2250. Now there is a no bad debt A is therefore dash here. 400 plus 2250, that is a 2650 minus 700, outer column 1950. The effect of bad debt or bad debt reserve in profit and loss account debit side. Now next adjustments is outstanding expenses. Salary 500, sundry expense 150, and rent rupees 150. The outstanding salary first added to salary, added to sundry expense, added to rent and tax. And the outstanding means payable, therefore is our liability. There are two effects. First, profit and loss account debit side one by one. First, outstanding salary 500, 15,000 plus 500, outer column 15,500. Now sundry expense 150 is outstanding. The outstanding sundry expense 150, outer column 1650. And outstanding rent tax is rupees 150, therefore outer column 5150, 5,150. And outstanding salary, outstanding sundry expense, and outstanding rent and tax is an expense, but is payable, therefore is a liability. The second entry liability side, outstanding salary 500, outstanding sundry expense rupees 150, and outstanding rent and tax rupees 150. Clear? Now next adjustments 1 2 3 4 5 is over. Now there is a two hidden adjustment is there. Now one by one hidden adjustments. The first hidden adjustments, leasehold building for 5 years. Year is not mentioned, date is also not mentioned, means from current year also. Current year 7,000. So 7,000 divided by 4. leasehold building, 7,000 leasehold building property is written off. 7,000 divided by 4 because lease for 4 years. The total lease amount is 7,000. 7,000 divided by 4, that is a 1750 leasehold property written off 1750, outer column 5250. And this is the loss. Therefore, profit and loss account debit side, second entry, leasehold building, yeah, properties written off 1750. 1750. Building, yeah, property, whatever. 1750. Clear? Now, next. Second adjustments, hidden adjustments. 8% Gita's loan on 110-2016. 110-2016. Amount is 15,000. Now, from 110-2016 to 31st 3 2017, so 10 11 12 1 2 3 6 months, and the rate of interest is 8% and the principal amount is 15,000. Now we calculate the interest on loan. Now interest on loan, 15,000 into 8%, 8 upon 100 into 6 divided by 12, that is 600. The plus interest on loan outstanding 600, outer column 15,600, and second entry, profit and loss account debit side. Second entry, profit and loss account debit side, interest on Gita's loan, outer column 600. Outer column 600. Now trial balance is over, all the adjustment is over, and two hidden adjustment is over. Now totaling. Now total of credit side is 1,22,150 and total of debit side is 97,900. Now we find out the gross profit or gross loss. Now total of credit side is more than debit side. Now we return both the side at 1,22,150. 1,22,150 minus this credit minus debit 97,900. Then difference is 24,250. Difference is 24,250. This is known as a transfer to profit and loss account, and that is a gross profit 24,250 to gross profit 24,250. Now this gross profit transferred to profit and loss accounts. Transferred to profit and loss accounts. The profit and loss account credit side by trading accounts. Gross profit transfer from trading accounts 24,250. Now again we total of credit side. This is debit side total is 32,050. 32,050, and this is a 24,250. Now here total of debit side is more compared to the total of credit side. Now we write down 32,050. दोनों साइड लिख दिया हमने 32,050. Now we find out the profit or loss. Now difference comes credit side. There is a debit balance. This is called debit balance, and that is a net loss. Now 32,050 minus this 24,250. 24,250 is equal to 7,800. This is a debit balance because the total of debit side is more than total of credit side. Therefore, the balance comes on credit side, that is net loss 7,800. by profit and loss appropriation account net loss. This not a net loss is transferred to profit and loss appropriation accounts. Now, profit and loss appropriation net loss, therefore net loss transferred to profit and loss appropriation debit side. Write down to profit and loss account net loss 7,800. Now we total that. This total is 15,300. This side 3,400. Now we take the difference and find out the net divisible loss. 15,300. The same total 15,300. Now 15,300 minus 3,400. 15,300 minus 3,400 is equal to 11,900. That is a net divisible loss. And net divisible loss is distributed between partner in their profit and loss ratio. Their profit and loss ratio in question is given 6:4. Yes, 6:4, maybe 3:2. 6:4. 6:4 divided by 2, that is a 3:2. Therefore, it distributed between partner in RAM. Distribution of net divisible loss, RAM, that is 11,900. 11,900 into 3 plus 2, 5. 3 divided by 5, 7,140. And Sham, 11,900 into 2 divided by 5, 4,760. Now, by partner's capital account, net divisible loss transferred to partner's capital account, Ram 7,140 and Syam 4,760. Partner's capital account debit side on 31st/3/2017 to profit and loss appropriation account 7,140,4,760. Now we find out the closing balance of partner's capital account. Now total this. Total of RAM is 84,000. Total of Syam 73,500. Total of debit side of RAM 26,940 and Syam 22,360. Now we the total of credit side is more than debit side. Now therefore 84,000 here 73,500. Same we written here on debit side 84,000 and 73,500. Now we take the difference and find out the closing capitals. 31st/3/2017 by balance carry forward. This is the balance opening capital and this is the closing capital. Now 84,000 minus 26,940. Now check 84,000 minus 26,940. There's a 57,060. 57,060. So here 57,060. Okay. Now the same way we find out the closing capital of Syam. The Syam is 73,500 minus 22,360. 22,360. There's a 51,140 closing capital of Syam. 51,140. This closing capital is transferred to balance sheet's liability side capital. Now balance sheet liability sides. Capital of partners capital Sam and Syam transferred to liability sides. And the capital account as a capital accounts. Now capital of accounts, capital of Ram 57,060 and Syam 51,040. Now total of both the capital total outer side 1,08,200. Now total of liability and total of assets always equal. Now we check 1,68,800, total of liability side, and total of asset side 1,68,800. Now, for more video, please like and subscribe my channel. Thank you.